Hello, this is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to talk about the good, the bad, and the ugly. And there's a lot of the latter two going on right now. So, wanted to give you a few things to chew on here as we start the week. We've got a pretty important week, I think, here as we head into month end. We head into the first notice day for September futures contracts. So a lot of things going to happen here throughout this week. Start out with the good. There are a couple of good things happening right now in the markets for us. And number one is the US dollar. And if you look at what's happened in the US dollar over the last couple, 3 weeks, the dollar's plummeted pretty hard. And some of that due to maybe some fear of US politics. Some of that maybe due to the odds of a decrease in interest rates coming up at some point. And so, whatever the reason, we're seeing the weaker dollar, and that's started to trigger some export business. We've seen China in the market for soybeans over the last 2 weeks. Cotton getting a little bit of at least hope for the first time in a while that we're going to see some export business there as well. And so for the good, I do have the weaker dollar and also do have the cotton market. When you look at what's happening in cotton, we're 4+ cents off the lows now, still down almost 16% from what the base price was back in the spring. But the market's pushed back up above its 9, its 20, and its 50-day moving averages. So here today, as I record this, we're just a touch softer. If we can hold the 50-day moving average, maybe we got to push in this thing, get December cotton back to the 100-day moving average. I think it'd be a good opportunity to be doing some pricing up here, 72, 73 cents if that happens. Going with the bad right now is the funds. Funds don't like ag commodities. They haven't for a while, and you can see what they've been doing. But just in the overall commodity sector, mostly ag, but this chart does include sugar, coffee, cocoa. But you can see the funds are short 711,000 contracts net. Biggest net short position in 5 years. I had to go back and look, but they were shorter than this just a few years back. But tells you that nobody really sees much positive in this thing. People are all lined up on the short side of the market, and they're waiting for, as we've talked for several weeks, months now, they're waiting for the farmer to sell out his long position. And we know that farmers are sitting on a lot of old crops still, especially in corn. And so that's the concern, I think, and that's the reason that the funds are holding this big short position. Now, you can say it's sometimes darkest before the dawn. Is there a reason these people are going to cover this and buy it back? Maybe. I would suggest it's probably not going to happen until we get into the back end of harvest. If it does, South American weather possibly could be a driver here this fall, winter if they don't catch some rain. But for the moment, that's definitely the bad. The ugly is the corn market. Now, I could go with several markets here. I'm going to go with corn today, especially nearby corn. The nearby September corn futures, which is what this nearby weekly chart is based on. We've got September corn trading down to 361.5 low here this morning. Lowest we've seen since back in 2020. And I can't say we didn't talk about this possibly happening last fall, last winter. You know, when we were already building corn stocks up, all the math said if we grew a big crop this year, we're going to be sitting on 2+ billion bushels again. That's kind of what's happened right now. And so there's no reason, again, for the funds to want to come back and buy this thing. And the other big negative right at the moment is this large farmer-owned stock position. And the June grain stocks report, USDA told us that the farmers were holding over 3 billion bushels of on-farm corn stocks. A lot of that corn is moving to market right now. We're hearing basis levels widening. You're hearing some elevators closing at noon. I heard 1 o'clock at one elevator the other day because they don't have space, or they're trying to keep their space because guess what? We got harvest coming up in a month. And so, you know, this is a problem, and this is going to continue to be weighing on the nearby market. And so this is, I've shown this a couple of times recently, once in my Aftermath webinar, once in my market report email letter last week. But you look at the structure of the corn market today, and you got September corn, you see these spreads are continuing to widen. You got September corn down further, and the nearby contracts down more than the deferred. So the spreads are continuing to widen. The carry in this market's widening. Right now, September to December, it's 3 months, 24-cent carry in this market, 8 cents a month. And I realize interest is going to chew up part of that, but 8 cents a month, you probably have elevators right now that are considering holding old crop corn through harvest if they got the space. And so farmers may want to consider it. If you can drum up the space, take that old shed and turn it into a corn flat or something. But the market is just screaming at people right now to carry corn off, keep corn off the market. And so the other part of this carry is the basis. So you got to look at your basis levels. But going into harvest, these elevators are going to fill up quick. And so you need to be making your space decisions now, kind of get your ducks in a row. Where are we going to hold this corn? How are we going to hold this crop? Where do we want to deliver it? Do we have storage space that needs to be spoken for? All of those things that need to take place today. Don't wait until September 20th. When you're getting ready to run the combine, you say, you know what, I need to make sure the elevator's open or got space. So those are some things you need to take care of today. But definitely the corn market right now is ugly. The other thing that happens in a carry market oftentimes, and I've talked about this before, is deferred contracts come down to meet the nearby. So when September corn goes off the board in a month, a little less than a month from now, if we go off at 363.5, what do you think is a magnet for the December contract? Probably that low 363.5. And so that low continues to be a magnet going forward. And when we continue to pull these deferred months down. So if you've got revenue insurance, the revenue insurance is going to use the December average during the fall period, whether it's September in the south or October in the north. And so we're going to be starting to set those fall prices here in the near future. And because of this big drop in price, we anticipate, a lot of these higher level policies, especially 95s, 90s, maybe even 85s this year, could be triggering some payments due to that loss in price this year. Even with good yields, you could still see some revenue payments made. So keep that in mind. The other thing I want to mention today, since it's margin protection season, wrote about this on Friday, but margin protection is using this deferred December contract of 25 at 430.5. Now, I don't know whether that's a good price or not, but compared to nearby September corn, it sure is. We're about a 70-cent carry for what, 15 months. And so if you think that we're going to continue to roll this carry all the way through a year from now, and you think that there's a good chance that a year from now you've got nearby corn trading in the 360s, then consider margin protection insurance with 430 something. I think we're 437 or 8 average so far. It's probably going to come down a little bit. But if you think we can lose 50, 60, 70 cents off this price in the next 12 months, then that might make sense to us. And we may not be looking at 430 corn in February when we set the average for the other policies. So just something to think about. We'll talk about it over the next 3-4 weeks, but wanted to bring that up as well. So with that, thanks for listening to the latest Thinking Cap. Hope you have a great week, and we'll talk to you again real soon.